Florida's real estate market in 2025 is facing a dramatic shakeup. Once thriving cities are now seeing sharp price declines, surging inventory, and buyers disappearing from open houses. Across the state, median home values have dropped by tens of thousands of dollars, some by over 15%, as rising mortgage rates and skyrocketing insurance costs hammer affordability. Homes that once sold in days now sit for months, with sellers slashing prices and offering huge incentives. Investors are pulling back, rental markets are softening, and new construction is flooding neighborhoods. These are the 10 fastest collapsing housing markets in Florida, where the dream is slipping away fast. Number 10. Cape Coral. Cape Coral, once one of Florida's hottest real estate destinations, is now experiencing a dramatic market cooldown in 2025. Just a few years ago, this Gulf Coast city was booming, attracting retirees and remote workers with its 400 miles of canals, low taxes, and median home prices under $280,000. But fast forward to today, and the script has flipped. Home values are tumbling, demand is slipping, and homeowners are starting to panic. In early 2022, Cape Coral's median home price peaked around $430,000, riding the wave of pandemic-era buying frenzy. However, by mid-2025, prices have dropped to approximately $372,000, a loss of nearly $58,000, or 13.5%, in just over 2 years. The downturn is even more pronounced in the new construction market, where oversupply has driven spec homes to sit on the market for 90-plus days, a sharp increase from just 30 days in 2021. Builders who once sold homes in days are now slashing prices by $40,000 to $70,000 just to get offers. Cape Coral's problems aren't just economic, they're structural. Insurance premiums have skyrocketed. A typical homeowner paid around $2,400 per year in 2020. Now, that same policy can run upwards of $5,800, driven by increased hurricane risk and the collapse of multiple local insurers. Property taxes have climbed as well, with the average bill reaching nearly $4,000, even as home values decline. For many, the math simply doesn't add up anymore. Mortgage affordability is another pressure point. With 30-year fixed rates hovering near 7%, a $370,000 home now costs over $2,600 per month in principal and interest alone, up from under $1,800 just a few years ago. As a result, first-time buyers are fleeing, investor interest has dried up, and out-of-state migration has slowed dramatically. Cape Coral, once the poster child of Florida's housing boom, is now a cautionary tale of what happens when fast growth, environmental risk, and affordability issues collide. Number 9. Sebastian. Sebastian, a peaceful coastal town nestled between Melbourne and Vero Beach, has recently found itself at the center of Florida's housing downturn. Once celebrated for its laid-back lifestyle and low home prices, Sebastian is now facing declining property values and a shrinking pool of buyers. Between early 2022 and mid-2025, Sebastian's median home price has dropped from $365,000 to around $315,000, a loss of $50,000, or roughly $50,000, 13.7%. And it's not just resale homes that are sitting longer. New construction is also seeing price cuts of up to $60,000. Insurance costs have skyrocketed here too. The average homeowner's insurance premium in Sebastian has increased from $2,000 in 2021 to nearly $4,500 in 2025. This sharp rise is due to intensified flood zone ratings and recent policy changes affecting older homes that lack modern storm-resistant features. In a town where many homes were built before 2000, that's a major issue. Insurance surcharges, along with rising utility bills and property taxes, are making home ownership increasingly expensive. Inventory has surged as well. In mid-2023, Sebastian had fewer than 150 homes on the market. By mid-2025, that number has ballooned to over 400, an increase of nearly 170%. Days on market have doubled from just 25 days in 2022 to over 55 days in 2025. Sellers are struggling to get offers without incentives, such as paying for closing costs or buying down mortgage rates. With 30-year mortgage rates hovering around 7%, many first-time buyers are priced out. A $315,000 mortgage now demands nearly $2,200 per month in principal and interest, excluding taxes and insurance. For a town where the average household income is under $55,000, that's a heavy burden. Sebastian's charm remains, but for now, the market is telling a different story. One of cooling prices, reduced demand, and rising homeowner costs. Number 8. Naples Metro. Naples has long been known as one of Florida's most upscale real estate markets, but in 2025, even luxury isn't immune to decline. At the peak of the pandemic boom, the median home price in the Naples Metro soared to an eye-popping $675,000. Fast forward to mid-2025, and prices have corrected to around $595,000, a sharp $80,000 drop, or nearly 12% over the span of 2025, just 2 years. High-end homes that once commanded $2 million are now selling for $1.7 million or even lower as demand pulls back. Inventory has swelled. In 2022, Naples had around 3,000 active listings. That number has climbed above 6,200 by mid-2025, more than double. Luxury properties over $1 million are sitting on the market for 100-plus days, with many sellers cutting prices aggressively or offering buyer incentives like club memberships or rate buydowns. One of the biggest issues is cost. Homeowners insurance in Naples now averages more than $8,000 annually due to rising hurricane risk and new coastal zone reassessments. Property taxes, while capped for homesteaders, are hitting non-residents and investors hard, averaging over $11,000 annually for a $1.5 million property. Combine that with a 7% mortgage rate, and a $600,000 home now costs over $4,200 per month in principal and interest alone. The rental market isn't faring much better. While high rents once shielded investors, average rents have declined from $3,200 in 2023 to around $2,800 in 2025 as competition increases. Snowbird demand is also thinning, with fewer seasonal buyers willing to absorb the higher cost of ownership and maintenance. Add in increased insurance claims and new condo reserve rules, and it's easy to see why Naples is slipping. Naples remains a stunning place to live, but its market correction is sending shockwaves across Florida's high-end real estate scene, signaling that even premium zip codes aren't recession-proof. Number 7. Jacksonville. Jacksonville, the largest city by land area in the continental U.S., saw massive housing gains between 2020 and 2022. But in 2025, the story has shifted from boom to slowdown. The median home price in Jacksonville has dropped from its mid-2022 high of $410,000 to around $357,000, a fall of $53,000 or nearly 13%. What's causing the downturn? It's a mix of higher borrowing costs, overbuilding, and a dramatic rise in housing inventory. In 2021, Jacksonville had fewer than 4,500 active listings. Today, that number is approaching 9,000, an increase of over 100%. Homes that used to sell within 10 days now linger for 40 to 60 days, and many sellers are cutting prices or offering cash toward closing to attract buyers. The oversupply, especially in fast-growing suburbs like Middleburg and Oakleaf, is putting downward pressure on prices across the metro area. Insurance premiums have surged here as well, particularly in flood-prone zones near the St. Johns River. Homeowners now pay an average of $4,200 annually for coverage, up from just $2,100 in 2021. Property taxes have also risen as assessments catch up with the pandemic-era price hikes, pushing average tax bills to around $3,800. The affordability crisis is deepening. At a 7% mortgage rate, a $357,000 home now comes with a monthly payment over $2,500 for principal and interest. That's a big leap for a city where the median household income is around $63,000. Renters aren't immune either. Average monthly rents have declined from $2,000 in 2023 to $1,775 in 2025, squeezing landlord margins just as maintenance and insurance costs rise. Jacksonville still offers economic diversity and job growth, but its housing market is clearly in correction mode. Rising inventory, affordability pressures, and costly overhead are reshaping what was once a pandemic-era housing winner. Number 6. South Florida. South Florida, once a magnet for sun-seeking investors and international buyers, is facing a full-blown market correction in 2025, especially in its sprawling condo sector. Median home prices across the Tri-County region, Miami-Dade, Broward, and Palm Beach, peaked near $540,000 in 2022. By mid-2025, that number has dropped to around $495,000, a $45,000 decline, or roughly 8.3%. But the damage is far worse in the condo market. In Miami-Dade alone, median condo prices have dropped from $420,000 to $355,000, a loss of over $65,000, or nearly 15.5%. New state-mandated condo reserve funding rules, passed in the wake of the Surfside collapse, are shaking up associations. Condo fees in older buildings have surged, in some cases doubling, from $400 a month in 2021 to $800 or more in 2025. Some owners now pay over $1,200 a month just in assessments and reserves. These rising costs, coupled with 7% interest rates, have decimated affordability. A $355,000 condo with today's rates and $1,200 HOA fees equals a monthly housing cost over $3,300. Insurance is another disaster. In 2020, insurance on a typical 1,200 square foot unit ran about $1,600 annually. Now, over $4,000 in many cases, especially for older concrete high-rises near the coast. Add in rising sea level concerns, stricter inspections, and stagnant wages, and it's clear why buyers are backing off. Inventory is also surging. In Miami alone, condo listings rose from 9,000 in 2022 to nearly 17,000 by mid-2025. Sellers are cutting prices fast, sometimes offering $20,000 in cash incentives or waiving closing costs entirely. Rental prices are softening too, with median rents down 7% year over year. What was once one of the strongest housing markets in the U.S. is now seeing the cracks widen, particularly for the middle class. South Florida's market hasn't crashed outright, but the condo sector is teetering, weighed down by high fees, declining demand, and systemic risks that continue to mount. Number 5. Orlando. Orlando, the land of theme parks and sunshine dreams, is suddenly waking up to a sobering housing market reality. Between 2020 and 2022, Orlando's median home price soared from $280,000 to $415,000, a jaw-dropping 48% increase. But in 2025, that bubble is deflating. Median prices now sit around $375,000, a $40,000 dip, or nearly 10% from the peak. And the slide may not be over. Part of Orlando's problem is overbuilding. The city issued over 17,000 residential permits in 2021 to 2022 alone. Now, many of those homes are flooding the market. Active listings have ballooned from 4,200 to over 9,000 in just 24 months. Days on market have more than doubled, from 18 days in 2022 to over 45 days in 2025. Sellers are offering mortgage rate buydowns, closing cost coverage, and even theme park passes, just to stand out. Interest rates around 7% have hammered affordability. A $375,000 home now commands monthly payments around $2,500, principal and interest, up from $1,500 just a few years ago. Property taxes now average over $4,200 per year, and insurance premiums, especially in hurricane-prone zones, have climbed past $5,000 annually. Orlando's rental market is also losing steam. Monthly rents have dropped from $2,250 in early 2023 to about $1,975 in mid-2025, a 12% decline. Investors who once thrived in the short-term rental boom are now scrambling to offload properties. Many vacation homes in Kissimmee and Davenport sit vacant, draining owners with high holding costs. Job growth remains strong, but inflation and high living expenses are driving locals out. Household incomes average $61,000, yet basic mortgage payments now consume nearly 50% of take-home pay. That's not sustainable. For now, Orlando still shines for tourists. But for homeowners and landlords, the city's real estate market is revealing some very real cracks behind the magic. Number 4. Punta Gorda. Punta Gorda, a small waterfront city on Florida's Gulf Coast, has long attracted retirees and boaters with its quiet charm and access to Charlotte Harbor. But in 2025, that paradise is facing serious headwinds. After peaking near $450,000 in late 2022, Punta Gorda's median home price has dropped to about $392,000, a decline of over $58,000 or 12.8%. While that may not seem extreme compared to big city drops, it's massive for a market that thrives on retirees and fixed-income buyers. What's driving the collapse? Insurance is at the top of the list. In 2020, the average premium was just over $2,100. Today, it's more than doubled to over $4,700 annually, and in flood-prone areas, that number can climb above $6,000. Many retirees who moved here for affordable living are now finding their budgets stretched beyond comfort. Some are selling and leaving altogether, contributing to rising inventory. In mid-2023, Punta Gorda had just 320 homes for sale. By mid-2025, listings exceeded 740, up over 130%. Days on market jumped from 22 to 60 plus. Sellers are cutting prices aggressively, often by $30,000 or more, just to get noticed. New builds are facing the worst of it. Contract cancellations have surged, and spec homes are sitting empty. Another issue? Medical and infrastructure costs. With an aging population and limited services, property tax hikes are being used to support city improvements. The average property tax bill now exceeds $3,600, a tough hit for retirees on Social Security. Add to that 7% mortgage rates, and the cost to finance a $392,000 home is roughly $2,600 per month before taxes and insurance. For many, it's simply unaffordable. Punta Gorda is still beautiful, but affordability, climate costs, and oversupply have shaken this quiet market's foundation, and 2025 may be just the beginning. Number 3. Fort Myers. Fort Myers, once the epicenter of Florida's pandemic-era housing boom, has now emerged as one of the fastest collapsing housing markets in the state. Back in 2021, the median home price surged to a staggering $425,000, up from $270,000 just 2 years earlier, a jaw-dropping 57% increase. But in 2025, that gold rush has come to a grinding halt. Prices have dropped to around $367,000, a $58,000 correction, or about 13.6%. For a city built on seasonal demand, that's a serious red flag. Housing inventory has exploded. In early 2022, there were fewer than 1,500 active listings. Today, the number is over 3,800, more than doubling in just 3 years. Builders overestimated post-pandemic demand and flooded the market with new homes, many of which now sit unsold for months. Days on market have tripled from 20 days in 2021 to nearly 65 days in mid-2025. Sellers are frequently dropping prices by $20,000 to $50,000 and offering incentives like free appliances or interest rate buydowns. One major blow: insurance. The average homeowner now pays over $6,200 per year, up from just $2,800 in 2020. Hurricane Ian's legacy still haunts the region, pushing up premiums and pushing out buyers who fear climate volatility. Property taxes are now averaging around $4,000 annually, adding further pressure. With mortgage rates hovering around 7%, buyers who once paid $1,800 a month for a $350,000 home are now shelling out over $2,600, a 44% increase. And with median household income in Fort Myers sitting just under $60,000, many locals simply can't keep up. Rents are falling too. Average monthly rent has dropped from $2,400 in 2023 to about $2,050 in 2025, a 14.5% decline. Investors are bailing, flippers are stuck, and new developments are being paused. What was once a market darling has turned into a cautionary tale. Fort Myers is still sunny, but the real estate outlook? Cloudy, with a chance of further declines. Number 2, Crestview. Crestview, a small city tucked into Florida's panhandle, may not make national headlines, but its housing market crash is one of the most severe in the state. Between 2020 and 2022, Crestview saw home prices skyrocket from $215,000 to nearly $310,000, an astonishing 44% surge. But in 2025, that momentum has flipped. Median prices have fallen to about $268,000, a $42,000 drop, or a 13.5% decline in just a couple of years. Part of Crestview's appeal was its affordability. Military families stationed at nearby Eglin Air Force Base, along with remote workers, flocked to the area for lower prices and a slower pace of life. But rising mortgage rates have decimated affordability. At 7%, a $268,000 mortgage costs over $1,900 a month, principal and interest, compared to just $1,150 a month at 3%. A staggering 65% increase. For a city where median household income sits at $61,000, that shift is massive. Inventory has nearly tripled. In 2022, there were fewer than 400 homes on the market. Now Crestview has over 1,100 active listings, with many homes sitting unsold for 60-plus days. Builders, caught flat-footed by the downturn, are cutting prices aggressively, some by as much as $30,000 to $50,000. Price cuts are now standard, not rare. Insurance is another hit. While rates here aren't as high as coastal Florida, they've still doubled, from $1,500 annually in 2020 to more than $3,000 in 2025. Property taxes have also climbed, averaging nearly $2,800 annually on modest homes. Combined with utility increases and inflation, many families are priced out. Rents have dropped as well. A typical 3-bedroom rental that fetched $1,950 in 2023 now goes for around $1,700. Investors are fleeing, and sellers are slashing to keep up. Crestview's quiet charm remains, but beneath the surface, its housing market is in crisis, driven by affordability shock, overbuilding, and economic fragility. Number 1. Northport. Northport has taken the unfortunate crown as Florida's most rapidly collapsing housing market in 2025. Located in Sarasota County, this city saw some of the most explosive growth during the pandemic. In 2020, the median home price was just $260,000. By mid-2022, it soared to an eye-watering $450,000, a 73% jump. But that boom has turned into a bust. As of 2025, the median home price in Northport has plummeted to just $377,000, a staggering $73,000 drop, or 16.2%, making it the biggest year-over-year decline in the state. Why the crash? Overbuilding is a key culprit. From 2021 to 2023, developers flooded the market with thousands of new single-family homes, expecting demand to remain red-hot. Instead, inventory exploded. Active listings have skyrocketed from under 900 in early 2022 to over 2,300 in mid-2025, up 156%. Homes that once sold in 7 days now linger for 70 or more. New builds are now routinely discounted by $40,000 to $60,000, and builders are even covering closing costs to avoid further price slashing. Affordability has cratered. With interest rates around 7%, a $377,000 mortgage now demands nearly $2,650 per month, up from $1,500 per month at pandemic-era rates. Insurance premiums have also surged, from about $2,200 in 2020 to more than $5,800 in 2025, thanks to heightened hurricane risk and remapping of flood zones. Add in $4,200 in property taxes, and Northport's once affordable dream is breaking household budgets. The rental market is showing signs of stress too. Rents peaked at $2,350 in 2023, but have fallen to $2,050 by mid-2025. With job growth slowing and buyers retreating, landlords are struggling to maintain margins. Northport's fall from grace highlights the danger of unsustainable growth. Once seen as Florida's next big boomtown, it's now ground zero for the state's housing market correction. If any city shows how fast fortunes can change, it's Northport.